All right, kids. So let's quickly revise Foreign Exchange Management Act, guys. First, the objective of this act as such, guys, is to facilitate all your external trades, guys, and payments. We will have to create a market for foreign exchange in India, guys, so that all the external transactions can be executed with ease. As far as the applicability is concerned, guys, which is under section 1, I said this act is applicable to the whole of India. Also, guys, it is applicable to a branch, office or agency that is situated outside India but is owned or controlled by a person resident in India. This act is applicable with effect from 1st June 2000. Under the definition part, guys, the first definition that we did, guys, was the definition of person. Person का definition is exactly the same as income tax, except that in the end we have also added branch offices or agencies which are controlled by such persons specified above, plus the word local authority as such, guys, is used in taxes but not in FEMA. Then we did, guys, person resident in India, most important definition. There are 4 points covered here. First point is applicable to individuals, second point to businesses, third point better to branch office or agency, fourth point also to branch office or agency, depending on whether it is situated in India or outside India. Individuals के लिए, guys, prima facie it says that they will be considered as person resident in India, guys, provided they have resided in India, guys, or stayed in India for 182 days or more in the preceding financial year. However, guys, what is more important are the subsequent points A and B, guys. They talk about the intention as such, guys, whenever a person is leaving in India or whenever a person is coming back to India. If a person is leaving India for the purpose of taking up a job, for the purpose of taking up business or a vacation outside India, or for any other purpose as would indicate that they are going to stay outside India for an uncertain period, you will not go by the period of 182 days, but they will be considered as person resident outside India with immediate effect. Meaning, if you have always stayed in India, guys, and you are leaving India on, say, guys, 1st of Feb 2025 to take up a job outside India, you will be considered as PROI from 1st Feb 2025. Even if you have stayed in India, guys, for more than 182 days in the preceding financial year. Next, guys, likewise, point B. This is all under first point only, guys. Point B as such beta states that if a person is coming to India for any of these 3 purposes, even if they did not stay in India, guys, for 182 days as such, guys, during the preceding financial year, they will still be considered to be a PRII with immediate effect. So if you have always stayed in US and you're coming to India on 1st Feb 2025 to take up a job in India, you will be considered as PRII with effect from 1st Feb 2025. What if you're coming to India as such, guys, for the purpose of visiting your family here? Even if you end up staying for more than 182 days as such, guys, you will still be considered as PROI. Anyone resident outside India, if they're coming to India, it has to be for these 3 purposes, only then they will be considered as PRII. Otherwise, they will always be PROI. Are we clear about this? Point B beta, point 2. ये हो गया point 1 individuals का. Point 2 beta talks about any other person or body corporate that is registered or incorporated in India. I told you, guys, if you talk about a partnership firm or HUF as such, guys, as long as they're situated in India as such, guys, they will be considered to be person resident in India. Then beta point 3 talks about what? Branch office or agency that is situated in India, guys, but is owned or controlled by anything, guys. This goes from the applicability part only. We already told beta, discuss that the entire act is applicable to the whole of India. Ab whole of India mein beta doesn't make a difference even if there's an outsider beta who owns a business in India. Likewise, guys, any branch office or agency located outside India, guys, but is owned or controlled by a person resident in India. Alright, guys. After that, beta, we did the definition of PROI. Anyone who's not a PRII will be considered to be person resident out of India, outside India, guys. Authorized person, beta, these are the people who are permitted as such, guys, to deal in foreign exchange as per the regulations of FEMA. Under this, beta, we have authorized dealers, we have money changers, offshore banking unit, or any other person which will be authorized by RBI. Administrative power किसके पास है? RBI. Adjudication, guys, who has a right to take action if things are violated? CG के पास है. Under CG, it is usually Enforcement Directorate, guys, or Ministry of Home Affairs and Ministry of External Affairs. After this, beta, we directly moved on to capital account transactions. Under capital account transactions, I said you should remember section 2E that deals with the definition, then section 6, and then beta permissible capital account transaction rules. Alright, the prima facie rule for a capital account transaction is that it is prohibited unless otherwise permitted. Section 2E The definition of capital account transaction is very simple, guys. For a person resident in India, it should alter an asset, liability or contingent liability outside India. For a person resident outside India, it should alter asset or liability in India. If you are buying a house, guys, outside India, will that be a capital account transaction? Yes. If you are settled in US and you're buying a house in US, will that be a capital account transaction? Not governed by FEMA, guys. समझ में आ रहा है नहीं आ रहा है? If Trump buys a house साथ बेटा in US, will RBI go and ask them बेटा? No. समझ में आ रहा है नहीं आ रहा है? Next, guys, we went on to what? हाँ, ये भी याद रखना guys. In case you are buying a machinery from outside India, it is still not a capital account transaction because we are not creating an asset outside India. Even if you are buying that machinery, guys, on credit and the credit period is in the normal course of business, even then beta it will not be a capital account transaction because it is governed by current account transactions. What if you are taking a loan outside India to buy that machinery? Up capital account transaction ban jayega because you are creating a liability outside India. Is that clear? Next, section 6, guys. The first part of section 6, guys, says that any transaction for a capital account purpose should be routed through a authorized person. Section 2 states that RBI in consultation with CG has the power to govern debt instruments. CG in consultation with RBI has the power to govern non-debt instrument. This is under 2A. Provided there cannot be any restriction imposed on amortization of borrowings or depreciation of foreign direct investment. Are we clear, guys? Repayment of loan के लिए या फिर if you have to additionally infuse funds in a business outside India based on their regulations, there cannot be any restriction. Subsection 3 bit of section 6 has been deleted. Subsection 4 states that if you are a PRII now and you have acquired any foreign asset when you were a PROI, it can be through any means, it can be gift, inheritance, you have earned it, doesn't make a difference. Or guys, you have acquired it by way of inheritance from a PROI. You can continue to hold those balances, guys, and deal with those balances in whatever manner that you want. There cannot be any restriction imposed on those transactions. The example that we discussed better is you lived in US for 20 years, you purchased a house there, you have investment in equity shares there. Even if you shift back to India as such, guys, you can continue to hold those balances, you can continue to buy something else as such better out of the sale proceeds of that. Are we clear? Subsection 5 beta is similar thing but applicable for investments in India for a PROI. Someone was a PRII, you have acquired assets in India as such, guys. Even if you have now become PROI, you can continue to hold those assets, or you have acquired it by way of inheritance from a PRII. समझ में आ रहा है नहीं आ रहा है? You lived in India for 20 years, you have assets here beta, you have now shifted to US. Can you continue to hold Indian assets? Yes. You live in US, you have received something by way of inheritance in India. Can you continue to hold it? Yes. Someone gifted a house to you in India as such beta, but you are someone who settled in US. Can you continue to hold it? No, that is not covered. If you are a PROI, the only way you acquire that asset in India beta is by way of inheritance. If it is by way of gift, you will have to. Matlab there are regulations applicable as such, guys. Are we clear? Next beta comes subsection 6. Subsection 6 clearly states that any branch, office or agency beta that is operated in India owned or controlled by PROI, RBI has the power to impose regulations. Subsection 7 says that though RBI has the power to govern debt instruments, it is CG in consultation with RBI beta that will determine what are those debt instruments. Are we clear? Then beta we moved on to permissible capital account transaction rules, guys. यहाँ पे rule 3 beta talks about what are permitted, guys, for PRII. Schedule 1 beta talks about permitted transactions for PRII. Schedule 2 talks about permissible transactions for PROI. I told you as such, guys, you do not really have to worry about remembering each and every part because literally as such beta it covers everything. Matlab, any capital account transaction is normally permitted as such, guys. You can buy a house, you can take foreign currency borrowings, you can give guarantees as such, guys. You can receive guarantees from someone outside India, you can deal in currency notes. Almost everything is permitted. You can buy foreign securities as such, guys. Rule 4 as such beta talks about prohibition. So rule 3 talks about transactions which are permitted. Why does the rule as such beta starts with permissible transactions? Because generally all the capital account transactions are prohibited. That is why we are talking about what are permitted. Rule 4 mein as such beta there are prohibitions. Under this also, guys, for PRII it is amount based. Amount based literally one small thing, that it should be within the limit prescribed under liberalized remittance scheme, LRS. As of now that limit is $250,000. Can the government increase that limit? Answer is yes. Let them decide. But as of now the limit is $250,000. इसमें बेटा द सेकंड पार्ट गाइस रूल 4 में इज फॉर PROI. दिस इज नेचर ऑफ बिजनेस. और PROI बेटा कैन नॉट एग्जीक्यूट, मतलब कैन नॉट बेसिकली बेटा एंटर इनटू अ चिट फंड बिजनेस गाइस, निधि कंपनी as such guys. He cannot invest in agricultural plantation activities guys, or real estate or construction of farmhouses. However, what is not covered under the fourth point? Under the fourth point as such guys, development of townships, constructions of roads or bridges guys, residential projects or commercial projects beta, or REITs, real estate investment trust. Last one beta, fifth point, which is not permitted for a PROI beta, is transferable development rights. Are we clear about this guys? There's another prohibition that is imposed as such guys, but this is by Ministry of External Affairs. Any transaction with North Korea cannot be executed. After that beta, we moved on to current account transactions. The definition of current account transaction is given under section 2J. Rules are given, matlab provision beta is under section 5, and rules have been prescribed as such guys under capital account transaction rules. Section 2J beta states that a current account transaction is anything that is other than a capital account transaction, and they specifically included 4 things beta, but it's an inclusive definition. Anything other than this also will be included. First point bolta anything in the ordinary course of business guys, including short term banking facilities guys, as long as it is in the ordinary course of business. The second one beta is in case you are paying for interest on loans or you're receiving income from investments as such guys, even that as such beta will be considered as a current account transaction. Next beta is for maintenance expenses of your immediate relatives, parents, children, spouse. Brother sister bhi nahi hai, but can it still come? No restriction. Any other current account transaction बोल के बोलेगा आगे rules में. Are we clear guys? And then beta in case remittance for in respect of foreign travel or education. So this is the definition guys of a current account transaction. Section 5 क्या बोलता है? Any amount that you have to withdraw or sell as such guys, foreign exchange has to be routed through a authorized person. Who has the power to govern these transactions? CG in consultation with RBI has the power to regulate current account transactions. As far as the rules are concerned guys, all the schedules are under different rules. Unlike capital account transactions beta, where one rule covers 2 schedules. Yes or no? तो यहाँ पे बेटा rule 3 covers schedule 1. याद रखना prima facie the rule is that current account transactions are permitted unless they are prohibited. That is why guys, schedule will talk about what are the transactions that are prohibited. So rule 3 schedule 1 beta talks about prohibited transactions. You cannot remit money out of lottery winnings. You cannot remit money beta out of racing or riding or any other hobby. You cannot remit money for purchase of lottery tickets as such guys outside India, or for any other gambling activity. You cannot remit money guys in respect of commission made towards equity investment. You have exported goods but you are not going to receive any foreign exchange for that. It will be adjusted against your investment. Because there is no foreign currency remittance, you cannot pay commission. Likewise beta, you cannot pay dividends if the rules of dividend balancing are applicable. You cannot pay dividend in respect of exports under rupee trade credit scheme. This is where the inward remittance is not in foreign currency, it is in terms of rupees, except 10% on tea and tobacco. You cannot make any payment in respect of callback services. That is where you give a missed call and an international telecom company as such beta is again connecting you. So you cannot make any payment for those callback services. Likewise beta, you cannot remit money out of interest income that you are generating on non-resident special rupee scheme. This is where beta we were encouraging other Indians as such beta who have settled abroad to remit money to India and hold balances in India. We were giving them a higher interest income, but you cannot remit money out of this interest income. Then beta rule 4 schedule 2. These are the transactions as such guys that are permitted, but approval of CG is required. Main thing that you'll have to remember here beta is cultural tours. Any payment irrespective of the amount beta towards cultural tours will require prior approval of CG. Then the next important beta is payments that are made as such guys by the Indian TV channels as such guys or internet service providers towards hiring charges, transporters. So all of that as such beta, for that again what will be required? Prior approval of CG. The next important thing beta, sponsorship or prize money as such guys of a sports activity outside India, provided it is not by a sports body and the amount does not exceed. If the amount exceeds $1 lakh, it is mandatory for prior approval. If the amount does not exceed $1 lakh as such guys, no approval. If BCCI is sponsoring, no approval, because it's a sports body as such guys. I gave an example guys where Reliance Industries is sponsoring an event outside India. Will prior approval be required? Yes, provided the amount exceeds $1 lakh. इसके अलावा बेटा we spoke about payment for advertisement in foreign print media guys. If the payments are made by state governments and it is not for the purpose of promoting tourism or for the purpose of getting an investment or international bidding, and the amount beta should not exceed $10,000. If the amount exceeds $10,000 and it is not for any of these three purposes, prior approval is required. If it is remittance beta for freight by PSU or you're importing goods on a CIF basis, prior approval is required. If you're making any payments beta to agents abroad, who is making these payments? Transport operators in India. Prior approval will be required. Likewise beta for membership of protection and indemnity club and for payment towards container detention charges, if the amounts exceed prescribed limits. Rule 5 guys is where prior approval of RBI is required. So rule 3 beta is prohibited. Rule 4 prior approval of CG. Rule 5 prior approval of RBI. Prior approval of RBI में भी दो parts है, for individuals and for other than individuals. For individuals guys, literally remember everything is permitted as such guys, provided the amount is within the limit of $250,000. And do not forget that this is in combination with permissible capital account transaction. When will the limit of $250,000 not apply? If it is for immigration, medical treatment or education, provided there is a proof. Basically you should get that in writing as such beta from the hospital or from that immigration office as such guys, that the amount required is more than this. Then prior approval of RBI is not required. Part 2 guys of rule 5 schedule 3 talks about other than individuals. In case there are donations being made as such guys that exceeds 1% of your last 3 years foreign exchange earnings or $5 million, whichever is lower, provided as such guys these donations are towards creating a chair, that is a seat in the educational institution guys, or for contributions to certain funds, that is usually towards research and development activities, or to a technical institution or body which is in the same line of business related to your business activity. In case you are paying commission guys for sale of residential flats or commercial plots in India as such guys, prior approval will be required in case the amount exceeds 5% of inward remittance or $25,000, whichever is higher. Again, prior approval will be required guys in respect of payment for consultancy services if the amount exceeds $10 million for infrastructure projects, $1 million in respect of other projects. Approvals will be required guys for reimbursement of pre-incorporation expenses provided the amount exceeds $1 lakh or 5% of inward remittance, whichever is higher. Any remittance that is made out of RFC account, resident foreign currency account guys, no prior approval will be required because it is your own foreign currency amount beta that you are maintaining in such accounts. EFC account se bhi beta, if a business entity wants to remit amount as such guys, prior approvals will not be required except for 3 things guys: payment towards protection and indemnity club, residential flats or commercial plots ka commission guys, and pre-incorporation expenses ka reimbursement. Are we clear? Then beta we did section 3 and section 4. Section 3 basically states beta that any foreign currency transaction has to be executed through an authorized person. You cannot make a payment as such guys in foreign currency unless the other person is authorized to accept the same guys. You cannot make a payment on behalf of any person resident outside India guys in India unless it is received by way of inward remittance and hawala transactions. You cannot execute a financial transaction in India guys to create a foreign asset outside India. Section 4 beta puts a blanket ban on every transaction. It says that everything in relation to foreign securities, foreign currency, foreign assets not permitted unless as provided under this act. Only if it is provided you're supposed to execute it, otherwise you're not supposed to execute it. Are we clear?